All right, so today we're going to take a deep dive into something that could be pretty important for planning your retirement, especially if you're one of those people who, watches the market every day and gets that, pit in their stomach every time it drops. Just imagine retiring and not having to be constantly worried about market crashes messing with your income. Pretty nice thought, right? Well, that's the idea behind fixed index annuities, or FIAs for short. We've got an article here that breaks it all down, and we've also got our financial expert here to help us unpack it all.
That's right. FIAs are designed to help you sleep better at night knowing that your nest egg is protected. But it still has the potential to grow when the market's doing well.
Yeah, I've heard people say that FIAs are risky because they're tied to the stock market, but this article makes it clear that they aren't actually direct investments. So what's the deal with that?
Yeah, you're right. That's a pretty common misunderstanding. The thing to remember is that FIAs are insurance contracts, not stocks. Think of it this way. You pay a premium to the insurance company, and they guarantee that your principal won't be lost just because of market fluctuations.
So I'm not actually buying stocks, but the returns are still somehow influenced by the market. I'm honestly still trying to wrap my head around that part.
Yeah, it is kind of unique. So basically how it works is the performance of a specific market index, like the S&P 500. That determines how much interest gets credited to your annuity. So your money's not directly invested in the index, but the index acts as a benchmark for potential growth.
Okay, so if the market goes up, my annuity benefits. But what happens if the market tanks? Am I stuck with zero gains?
Well, that's the beauty of it. The worst case scenario with an FIA is you just have zero return for that period. Your principal is protected from losses.
That's pretty reassuring, and especially as we get closer to retirement. I mean, who wants to watch the retirement savings just vanish because of a market crash?
Exactly. That peace of mind could be so valuable, especially when you're moving from, building your wealth to actually using it for income.
But wouldn't I make more if I just rode the wave of a bull market with like regular investments? I mean, that potential for higher returns has got to be tempting, right?
Yeah, that's true. You might see bigger gains in a bull market with direct stock investments, but remember, with that potential reward comes much higher risk. FIAs are all about finding that balance. You participate in the market gains to some extent, but without having to stress about losing your principal.
So it's like having a buffer against market volatility. You're not completely out of the game, but you're also not on the craziest roller coaster.
That's a great way to put it. You're still capturing some of that upside potential, but with a safety net there. And speaking of safety nets, the article mentions some other benefits of FIAs.
Oh, yeah, let's get into those. I'm curious about what other perks come with this whole FIA thing.
Well, one thing that stands out is that there's a variety of features you can pick from. You can really tailor the FIA to what you need. For example, you can choose guaranteed fixed rate accounts within the FIA, kind of like a CD. Those give you stable, predictable returns.
So even within the FIA, you have options for how you want some of your money managed. That's pretty cool.
Yeah. And for people who are thinking about their loved ones, there's also a guaranteed death benefit. So that makes sure that your beneficiaries get a specific payout if you pass away, no matter what the market's doing.
That's a huge relief for a lot of people. Knowing their family will be taken care of no matter what happens, that can really bring some peace of mind.
Absolutely. And there's even more. A lot of FIAs will also have a minimum interest credit rate, so you're guaranteed at least some growth, even if the market's flat.
So there are multiple layers of protection built in. Sounds like a pretty good deal, especially for someone who's getting close to retirement and doesn't want to gamble with their savings. What about accessing my money, though? Is it locked up until I retire? I feel like that's how annuities work, and that always made me hesitant.
Yeah, that's a common concern, but it's not totally true. Many FIAs have what's called guaranteed liquidity features. That means you can access a portion of your funds with a penalty if you know something unexpected comes up. It's about finding that balance between security and being able to access your money.
Okay, so FIAs offer protection from losses. They have the potential for growth tied to the market. And they even have options for guaranteed income and access to funds when you need them. It sounds like a pretty versatile tool for planned retirement.
They definitely can be, but just like any financial product, it's super important to understand how they fit into your overall portfolio strategy, and that's what we're going to talk about next.
That's a great point. It's not us about the features themselves, but how they work with your other investments. I'm ready to dive into that.
So when we're putting together a retirement portfolio, we always talk about diversification, right? Like having a mix of stocks for growth, bonds for stability, and cash for, easy access. So where do FIAs fit in all that?
Yeah, that's the big question. We talk about how FIAs give you a level of protection that you don't get with stocks, but they also have that growth part linked to the market. You're kind of a hybrid.
Yeah, you got it. That's what makes FIA so valuable, especially for people who are getting close to retirement. and want to protect their savings but still keep up with inflation.
Okay, so for someone who's more on the conservative side with their investments, would you say putting some of their portfolio into FIAs could be a good idea?
It could definitely be a smart move. This article we're looking at actually says that for people who don't like taking risks, FIAs might actually do better than bonds or CDs over time, especially when the market's all over the place.
That's interesting. So it's not just about protecting your money. You can actually come out ahead with FIAs, even compared to those like safe investments.
Exactly. It's about finding that sweet spot between protection and growth. And, as we get closer to retirement, we have less time to recover if we lose money. So that guaranteed protection becomes even more important.
Makes sense. The closer you are to needing the money, the less risk you want to take with it.
Right. And once you've got your basic retirement income covered, like from a pension or Social Security, FIAs can kind of act as a buffer. So you can maybe be a little bit adventurous with other parts of your portfolio.
So it's like having a safety net so you can take some calculated risks with other investments, knowing that some of your money is safe from big market downturns. That's a pretty powerful idea, especially for someone who's a little scared to get into the stock market.
Exactly. It's all about finding the right balance of risk and reward for your situation.
With all this talk about FIAing part of a good retirement plan, it makes me wonder, are there certain types of investors who FIAs are really good for?
That's a great question. I think one group that comes to mind right away is people who are just starting retirement. They've worked hard, saved a lot, and now they need to make sure their money will last. FIAs can help create a predictable income stream, so they don't have to constantly worry about the market, going up and down and eating away at their savings.
Yeah, that makes sense. Especially with that whole sequence of returns risk, where a few bad years early in retirement can really mess things up.
Exactly. And let's not forget about people who just have a lower risk tolerance. They might not want to get into the stock market, but they still want their money to grow. FIAs give them a way to benefit from market gains without the fear of losing their principal.
It sounds like FIAs can really work for a lot of different needs and risk profiles.
They can, but like we've said before, they're not a magic solution, and they're not right for everyone.
Right. This is where working with a good financial advisor is important, right?
Absolutely. They can help you figure out your own situation goals and risk tolerance to see if FIAs are a good fit for your overall plan.
And I bet a good advisor can also help you understand all the different features and options you have with FIAs, because it sounds like there's a lot to think about.
You're telling me there are different index options, participation rates, camps, all kinds of stuff. That's why having a knowledgeable professional by your side can be so valuable. This article also talks about how important it is to pick an insurance company that gives you clear, easy to understand information.
So do your research, ask questions, and make sure you understand what you're getting into before you make any decisions.
Exactly. It's all about being an informed investor who knows what's going on.
Okay, I feel like we've covered a lot here. We've talked about how FIAs work, their potential benefits, and how they might fit into a retirement portfolio.
Yeah, and hopefully we've cleared up some misconceptions along the way.
Yeah, I feel like we've really gotten a good look at FIAs and learned some interesting things about them. For anyone who maybe joined us in the middle of this deep dive, let's do a quick recap of what we've talked about so far.
Sure, so we've been talking about fixed index annuities, FIAs, as a possible way to protect your retirement savings from, the ups and downs of the market, but still give them a chance to grow.
And the big thing to remember is FIAs aren't directly in the stock market, so you won't lose your principal if the market crashes. That's a huge plus for people who are close to retirement and just want to be able to relax knowing their money is safe.
Right. That peace of mind is so important for a lot of investors, especially those who are moving from saving to actually spending their retirement money.
We also talked about how FIAs could potentially do better than those more conservative investments like bonds or CDs, especially in a volatile market. So it's not just about protecting what you have. You could actually end up with more money using FIAs.
Exactly. It's that balance between protection and growth that we've been talking about. It's really key to doing well financially in the long run.
And we can't forget about how flexible FIAs are. You can customize them with different features to get exactly what you need, whether that's guaranteed income or death benefits, or even just being able to access your money if something unexpected happens.
You're right. There's a lot that goes into FIAs, which is why it's so important to work with a good financial advisor. They can help you figure out all the choices and see if FIAs are right for your whole retirement plan.
So as we wrap up this deep dive, I want to leave our listeners with something to think about. Imagine knowing that your retirement income won't disappear if the market crashes. How would that change the way you invest? Would you be more comfortable taking a little more risk with some of your other investments?
That's a great question. FIAs offer a unique way to balance risk and reward. And for some people, that could be a total game changer in reaching their retirement goals.
And even if FIAs aren't right for you at this moment, understanding how they work gives you more tools to use. Knowledge is power, especially when it comes to making decisions about your financial future.
I agree. It's all about being curious. looking at your options, and finding the strategies that fit your needs and what you want to achieve.
Well said. Thanks for joining us on this deep dive into the world of FIAs. We hope you found it helpful and informative. And as always, keep learning, keep asking questions, and keep working towards financial well-being. Until next time.